There we go. There we go. There we go. Actually, all right. We should be live. All right. Thanks everyone for tuning into the Sistine Research live stream. I'm here with Paul from CVO Crypto and Leading Crypto. Well, Paul from Leading Crypto, known as CVO Crypto on Twitter. So go follow Paul on Twitter if you don't already. I hope you tuned in last week. I really, truly hope you tuned in last week because you got two incredible calls from Paul on both Ethereum running back up to $1,700. I think you had some key levels in the $1,600 region. Absolutely nailed that trade. And then more excitingly, Filecoin absolutely crushed it with the Filecoin trade. Was bullish on Filecoin, and that was like the top performer last week. So that was a phenomenal setup, man. Really appreciate that.
Yeah, absolutely. And thanks for having me back, man. It really just goes, in my opinion, just to show. I mean, it's, you get to these certain areas and you have to be willing to, dedicate some risk at, certain places. Obviously, that was an ideal situation, and, it's played out pretty well so far. And, just see what we got next. So, yeah, I can't believe that was only a week ago at this point.
Yeah, it kind of feels like it's been a while. Well, look, guys, these late night live streams, they're not professional. They're very chill. They're very laid back. It's all about putting in some time on the charts, and that's exactly what we're going to do. So I will pull up my screen here. See, the best way to do this does cut our faces away when I share my screen. When you share your screen, it doesn't, because I'm like kind of screen capping. So yeah, I'll just stop sharing and we'll just go full screen with my screen. I'm going to cover Bitcoin, and then Paul's going to cover Bitcoin and ETH, and I'll go through ETH as well. But we'll start out with Bitcoin. So first of all, I like to start with a blank chart, and then just kind of jump in. And then we kind of layer on some various indicators. So we've got our price bias levels, and this is really, really interesting because we're at exactly 25K 25K Bitcoin, 24.9 or whatever, but 25K is the key resistance level that we're struggling to break through. And I'm of the opinion that 25K, this kind of bear market cycle and bear market rally thus far, is reminding me a lot of 10K last cycle, where it was just kind of that resistance. Yeah, we broke through it on the bear market rally, but we had several attempts where it was just that pesky resistance where it was very psychological. Bitcoin was really struggling to sustain price over 10K. While I do think that we get continuation higher, I could see 10K being a really important, I'm sorry, not 10K, 25K being a really important level in the future if we do something, along the lines of what we did last night. I'm not saying this is what we're doing. I'm just kind of illustrating the fact that 25K is really, really big resistance, and it's psychologically so. Also, we built up some structural resistance is there, and we do have our margin pressure levels and whatnot that we can throw on in a moment. But 25K is the level that we need to break and sustain price action above. Now I'm going to throw on RSI and show you that, look, the RSI is not painting exactly the most bullish picture. Now we dropped below to the 50 level, and now we're holding above 50, which in and of itself is fairly bullish. But what we do have is we do have a nice downtrend in RSI, which doesn't necessarily mean in and of itself, as long as we're above the 50 level, this doesn't necessarily mean that we're going to go lower. But it does create some bearish divergence and a divergence between where price action actually is and how aggressive buyers in this market actually are. And we're kind of loading up under 25K. And I do think I posted a tweet earlier today where I was kind of leaning towards a pullback to our mid-range, which I'll throw on in just a second. But now I'm kind of leaning towards continuation. The more we load up under this 25K level, it's just one of those things that it's very uncertain at this point in time. You've got some bullish news out of China. Chinese regulations around crypto potentially relaxing, buyers potentially coming in. It's very unclear, but then at the same time, this is going to be a very volatile week. More than likely in the S&P 500, we kind of have a short trading week ahead. And I think tomorrow could be pretty revealing. Speaking of the S&P 500, I do want to see if the futures market's open, and it's down a little bit in comparison. So nothing too crazy right now, nothing free falling. But we do want to keep an eye on this. And this is very, obviously if we zoom in, a key resistance level. And that actually, I've not taken a look at the 4-hour chart. This is actually a bullish pattern. So the case for a breakthrough of 25K and a break upwards, in my opinion, is strengthening. We do have that bearish divergence, but again, we're above the 50 level. So this is a bullish pattern, it's an ascending triangle. These patterns are really, really nice to trade. Ideally, you want to get in on the third touch. So somewhere in this region, we kind of had, the second and the third touch back to back. You could have gotten in right there. But overall, a bullish pattern and is making me lean more towards a push up through 25K. It's just difficult to know exactly what it's going to take to break through such a big key resistance level of 25K. So obviously nothing guaranteed. Am starting to lean a little bit more bullish as we kind of look through this chart. Guys, the last thing you want to do in any market is fight the trend. And if we zoom out to the daily, one of the things that the easy bands do is it helps us estimate. That's the indicator that I've got on right now. It helps us indicate or identify the level of risk in the market. So obviously, if you're up in the red easy band region, it means you're a little bit overbought and you're at risk of a mean reversion back down to the 21-week simple moving average, or even down into the green easy bands. If you're in the green easy bands, it just means that the market's a little bit oversold. It doesn't necessarily mean that it's an optimal buying point, right, for a long-term strategy, but it does mean that you're very likely to get some sort of a mean reversion. But what this also does is, because this is built off the 21-week simple moving averages, it makes it a very easy and visual to start to identify when you are in an uptrend versus a downtrend. And the trend is starting to move upwards here, right? It's starting to move upwards, and you generally do not want to fight a trend. So once these easy bands started turning downwards and started moving downwards, and 21-week simple moving average started tilting downwards, it was not in your best interest to look for longs. It was not in your best interest to try to fight this trend. Obviously, there were points at which we were wanting to accumulate when the market became very oversold or was testing support levels. But otherwise, you were best off from a trading perspective looking for some of these short opportunities, right? And I'm in the camp that the most likely scenario is we do get some trend continuation. We are starting to get a little bit I hesitate to use the word overbought, but we are kind of in the mid zone approaching these red easy band levels. These are the levels at which or the zone at which I would be more inclined to start trimming some positions, spot positions included, taking 5-10% profits off the table, starting to rotate out, potentially back into cash. Get rid of the easy bands. I do want to throw on this range though. While we are in an uptrend, in an established uptrend here, we are still in a pretty long-term bear market range. So if we count this FTX collapse as a deviation, we ran it back up, we're back towards the top of our bear market range, which is basically 19K to 25K. And if we take our mid-level tool, which I don't use fib levels, I don't use fib retracement levels. I've just kind of changed my fib tool to create a little handy dandy mid-level tool. If we throw this on and quickly find our mid-level, it makes a lot of sense, right? From our top of our range to the absolute bottom of our range, including the deviation, we kind of held support on top of it. Right, and then we also throw that up to the actual range where we held support twice, and then as resistance. Right, that gives us another kind of mid-range level from this point, which is very in line with this previous resistance and this support. Okay, so then we can get rid of this mid-level tool with the kind of the adjusted fib levels. Right. And we can kind of just look at our range here. And this is kind of what I tweeted out earlier, is that if this bearish divergence comes in and we do see a correction further down, this is kind of the pocket that I'm looking for Bitcoin to test, to potentially actually run these lows that we just made and really, really spook people, right? And maybe test, 21, maybe either double bottom at 21.7, potentially come down to 20 even, maybe even run, deviate below this range, recover it, and that would be our long trigger to move back up and target the top of the range, or, our 28 to 30K to 32K levels. But I hesitate to buy the top of a range, and I'm not in the business of buying resistance. I'm in the business of selling resistance. Buy support, sell resistance. That is how you range trade. So I'm being very cautious here. While I am, I did mention I'm a little bit bullish on a breakout. That is what I'd be waiting for to take a long position. Look for a little breakout, especially if it's a small one and it returns to find support, and then it does check as support and retest. Then we're very likely moving up to our 28 to 32K range. But we do want to be careful here. We do want to wait. And when we do get that breakout, we do want to keep tight stop losses down below our prior resistance level that we're breaking out from. I'm going to toss it over to Paul and have him cover some of his charts on Bitcoin.
You got it.
I know it's pretty wishy-washy there, but we're literally, like, you kind of have to be, in my opinion, because we're butting up against 25K. Like, you could take a long on the ascending triangle and have, tight invalidation, but it's just like you can make a strong case for shorting the 25K resistance. You can make a case for, trading the breakout.
Right. Yeah, I mean, it's definitely, a time frame where, we say it in the group a lot, you don't want to try to catch the last, eighth of the move, essentially. Magic Internet Money in the chat there. And then a lot of people tend to do that, right? It's like, even if we were to, for us, for example, we're targeting pretty heavily towards this region. However, if we don't get it, now at least, you could very well come down, get a pretty decent pullback in this area, since we've had a pretty substantial rally. You got to be prepared for that. You don't want to be entering the market right now, right? For a potential, even though that is a really nice move, it's not much at this point, even, 7 or 8%. And does it have to stop there? No, we could very well, if we continue on and just kind of keep blowing through, there's just areas you really want to be, concerned with. And knowing that we haven't had a really decent pullback is one of them. However, a lot of these times when we have these, almost explosive moves out of the, potential bottoms, whether or not this is long-term or just, locally for a while, they don't tend to give too much of a pullback. So it is, like you said, it's a little wishy-washy in that sense if you're looking to enter the market right now. More than anything, we were talking just a minute ago before when we started, it's just nice to have Bitcoin just kind of ranging in this region, because it's allowing the altcoins to, continue rallying. However, when the dance ends here on Bitcoin for a bit, obviously the altcoins are going to take a hit with it as well. So it just is the question of when and how is that going to happen, if it happens. For me, a couple areas I'm looking at still remains, obviously our yearly pivot up here, which is coming in like $26,000. For anyone that was looking at this breakout as falling wedge, descending wedge, right? You would have an overall target of your gold pocket to the upside, right? Which gives you a target in this region, which is also that yearly pivot. So it's got some confluence, with fib as well. Not only as just an average in price action for the total of last year. You can put a little pattern spin on it if you'd like. But like I said, nothing to be married to in that sense, especially if you're looking to enter now. If you've had positions in play, obviously that is, where the next target area is. Looking at the current, price action from where we are at this exact moment, you are at the highs. I try to keep this as clean and clear as possible when I come on here on Mondays. One area that I'm, concerned with just for this week, which doesn't have to hit this week, but once again, it's got a high hit rate, is potentially all the way back down to 23,658. So that's last week's average. We've got our month open, which we're living above right now. So that's a good thing. And and we're basically, like you said, butting up into that $25,000 resistance. When I look at the entirety of this range as well, you can see that, essentially we're breaking out of this region. And I'll go ahead and dress this up real quick. So this is basically the overall range that we've been in for quite some time. I really enjoy this area because if we start to come back into this area, you've got a gold pocket, lines up with the overall low of the range, point of control. So there's some areas stacked down here, and that would be all the way back down at like 19,000, 18,900. The CME gap, everybody would be going on about if we came down to that area. But otherwise, potentially it's still onward and upward. Me, I'm still looking for. I'm going to look to see if we get a reaction at this area, that 23,780. But it still remains the same as we were going over on last one for me, as far as that would go. And as far as altcoins, so very similar. You don't want to get caught getting too greedy at these times because we've been running for quite some time. I did kind of draft up a quick chart on ACH for, I think, like Switchblade, or somebody in the chat there, like one of the first comments tonight. And I just want to kind of showcase how obviously this is not something you probably want to be chasing at the moment. Could it go higher? Sure. But from the beginning of the year, this is up almost 600% right now. It's one of the few that has actually made it through to yearly pivot from last year. I've highlighted a couple of areas here just to kind of be aware of if you are in a position. I think he said he doesn't understand the fundamentals. Personally, I don't know what the fundamentals are, but as far as this asset would go on a trading scale, we did have a pretty big range. The most relevant range I depicted was basically the entire year of 2022. You can see that we spent a lot of time at the low, basically broke out with everything else this year as well. So far, I've basically just rotated the range, so meaning that we've gone from low to high, and we've come into the gold pocket here locally as well. So we discussed that gold pocket, several times on the previous videos here, but that's 0.618 to 0.61. I'm sorry, 0.618 to 0.65 retracement of this area that we're measuring. So pretty decent area, pretty decent target short term. That quarterly above is another one for me. And as far as any more drastic upside for ACH, what I would look for is basically clearing above this major. If you go to the 3-month time frame, you can pretty much see what it is, right? So you could look at this as a pretty decent, engulfing candle. At the same time, you're essentially swing failing. So you're coming up and you're taking all these highs from now, basically a year, right? So something to be aware of if we do start to turn around again. So once again, not something you want to be buying at this moment. And then the next big area, so a major target for one, and if you clear it, potentially I wouldn't say new all-time highs, but new highs as we go on from here. But it's going to be right here at 0.06 cents, and you can see how much how relevant this area has been on 3-month chart, right? So that would be how I would approach ACH at this moment. Personally, I wouldn't really touch it if you've got anything in there. And that's one of those things where it's just about managing risk, because could it shoot up to this area potentially? It's at like a 91 on the RSI on the daily though, so something to keep in mind. And that's only like another 30% to get to where. I'm sorry, is that the area? Yeah, must be. Yeah, so that's actually not too much. So basically, that's clearing that gold pocket I just pointed out. So 30 cents puts you up in that 6.4 cent region. 30% move after a 600% gain. Once again, not trying to catch that last bit. If you're not already in this, if you didn't catch it already, and for anybody just looking for it, there's your rhyme and reason to some degree on why it went to where it did to some degree. But yeah, let's take a look at Ethereum. So ETH last week we were living, I think it was right here. I'm pretty sure it was actually, because it was right after the weekly close, which this was the weekly low last week, or the previous week before that. And what I was looking for was at least a run back into this range here. We had a previous average there, a couple other things lined up with it as well. And then we had our November high, which has been really, really relevant for quite, obviously since November. So the current areas that, I'm concerning myself with is we've got a new weekly open. which is exactly $2 off. But this is essentially the November high. All right, so that's like 1680. Yeah. So that November high level, which to me still holds a really big level of support, resistance, relevancy. It's an area you want to be above for upside. Obviously, we lose it, we start looking down. We've danced around it and really been kind of green mamba-ing in this region, right? Is what everybody kind of tends to look for when you get the big move up and you just kind of start bumping your head on resistance. So we've been consolidating below resistance for quite some time here. When I look at this in a couple of different fashions, we've had a couple of short-term trades in the interim. Last week being one of them, week before that being another one. From basically you had you took the highs here at that November high all the way back down to at the time it was our untapped monthly average here. From there, made it all the way back up to essentially sweep the highs once again. Currently, we got a new weekly, and it's at 1628, so not too far below us. One thing about this is I have an idea, not necessarily an idea. I was kind of dancing around this thought, I guess, last night. I guess that is an idea, but I'll go over that in a second. Weekly open though for me is a pretty big one, and obviously we still have our highs. And just like a few weeks back, a really clean area to look to get above at the moment is basically just our current high. Not only is that just above us here, pretty small window, but we're living now above our weekly open. We are closing substantial candles above that November high. We've essentially back tested it as well. So just looking to see if we can clear this region, and if so, I think we make our way onward and upward towards this yearly here, that 1986 level. The only thing I would throw out there is Bitcoin is only about 8% away from that equivalent area. For Ethereum, this is like a 20% move. So 16, 17. So, double the percentage gain if that was the case, if we were to see the similar move out of Bitcoin. Reason I bring that up is that's not uncommon to see Ethereum outperform in the sense of, the same similar moves as we kind of rally or drop. The only thing is that on this same rally to the upside, Bitcoin and Ethereum have been steady, holding pace. I think Bitcoin ran 62, 66%, even might have ran a little bit more than Ethereum actually, but Ethereum is right there with it, 62%. So, unlike what we've seen in past rallies where the summer rally of last year, Bitcoin rallied, I think only 40% and Ethereum rallied like 120. There's just different times where one or the other is going to outperform there. So targets to the upside still remain the same. Still looking for potentially, if we start losing that now weekly open, aka that November open, we have now taken basically all these highs right here. So the recipe is there for a decent little short. I just think pushing up still is on the table, but that's just what we have to monitor as it comes, right? So we do have a beautiful gold pocket down here, which lines up nicely with a couple of things. But before we get there, this region right here, I highlighted this. So just kind of zooming in. It's not a huge pullback if this was the case, right? I'd say if we were to just pull back to this local area here, it's about 8%. But when looking at, the high time frame ranges, this is the developing quarter. And one thing I like about it is, one thing you have to keep in mind, it is developing. So it's kind of like looking at a moving average, right? It's going to differ. The ranges, the value area is going to differ as we kind of go on and create more price action. Will be set in stone the end of March. But for now, it is a guide to some degree. And you can see how we're really just holding our own here at the high of this area. Breaking back down, we've got I had a noise outside of my room here. You got a pretty statistical target here, right? It's our natural target of the point of control. We do have the high volume nodes coming in pretty evenly, however, so I did want to point that out, that these, this whole region really is almost equivalent as far as volume would go. But the local gold pocket here from local low to local high does come in about this 1580 area. So just something to kind of keep in mind as well as we come down. Obviously, we're living back in the range. This would become our natural target anyhow. And then it does kind of have a little bit of fib confluence here with the gold pocket. Anything more than that, I would start looking to really hold that monthly pivot, lose that. And we have the overall gold pocket now from low to high that we spent a pretty good amount of time creating over the last couple months here. And let's see. Yeah, so, and this was a couple of things here, that line up with this. This was a previous monthly pivot. This is also now a quarterly value area high. This was basically your, huge area of consolidation from essentially September all the way through. So a 2-month region here. Obviously, this was a pretty strong high at the end of the year, level that we beat here, and as well as your, overall gold pocket. So we've talked about this area. We both agreed that if we came down to this region, we'd be really paying attention. I think that everybody be getting, this would be in line with when we were looking at Bitcoin. This would be, come down and fill the CME gap, drop into like 18.9, 18.8, stuff like that, really freak everybody out. When all you do is just rotate the range back down, get a really decent high or low, potentially, and then we'd see how things go from there. But at the moment, we are still where we are, so you can't get too far ahead, but you want to be prepared as we come into it. And it's still November high for me, so 1680. I know we've kind of flirted with it a bit here, but still, holding above this now. And we spent a lot of time just closing 4 hours, dailies, everything below it. And I'll switch this over. So just so it's clear what I'm looking at there, right? So that 1680 mark. Switch it to a daily view, just kind of get that look on it. You can see it was obviously our high. Basically, we ran it back to it, swung it here, wick, finally broke above. And now for 1, 2, 3, 4 days, we've been holding above that November high, which has been holding us down since then. So that is the one thing to me at the moment that I'm looking for. If we start closing back below that, especially on a daily, then yeah, maybe we're coming back down, going to get that decent pullback now. Otherwise, I still am looking up a bit, right? So still looking up towards this region. And one thing about this current weekly pivot, I target these a lot as we come into them. They do have about a 80% hit rate. So there is 2 out of every 10 that aren't going to hit. However, it doesn't have to be hit this week either. It can be something that we leave behind and come back to. And just for fun, if we were to say, we run it up in this region, which once again, it really does come down to just holding this area. But let's just say we run it up in this area, maybe this week, you have a really nice gold pocket that lines back up right there at that weekly pivot. So just something completely speculative at the moment, but that would be something ideal if we get it. Otherwise, you are trading right into resistance. So the only thing that's a little, more bullish at this moment to me is that we're holding above on that November high with a couple daily candles. But it depends on how Bitcoin and the rest of the market want to react. I'm curious to know what your thoughts are on Ethereum too, if you.
Yeah, absolutely. Let me throw on the chart. Again, I'm super wishy-washy right now. Let's throw this on.
The term wishy-washy.
What's up?
I said the term wishy-washy.
Yeah, it's just it's not that it's just I think the market could just as easily go down as it could go up. I'm inclined to bet with the trend, but at the same time, I like to view, okay, like where am I comfortable buying ETH at? Like, I know not everyone's situation is the same. I know some people are probably, brutally underexposed right now and they feel like they have to buy because this trend is getting away from them. But at the same time, like me personally, where do I feel comfortable buying? And it's at these margin pressure levels that we've discussed quite a bit. This is our short margin pressure level. It comes in at around 1350, which is key level that Paul just discussed on his chart. I think you had it marked out from 1340 to 1360, or maybe it was 1350 to 1370. Regardless, it's still in this general region, and I would be very hard pressed unless there's just some sort of massive black swan event, which there very well could be. This has been a crazy world recently in the news. When is it not though? If we did come back down to this range 1350, like I just feel very comfortable buying there. Just feel very like extraordinarily comfortable buying there. And could we fall below that? Certainly, but I just think there's so much demand there. It's the point at which, you know, these shorts are going to have to stop selling on 2x leverage, and that's going to, you know, basically lead just to only, you know, spot selling left. It's a key level. And I just happily buy there. So really, you know, when I do TA, I like to think of it from, you know, an actionable standpoint, and, you know, just draw up different scenarios. One scenario is we come back to this confluence level. Let me actually throw on the long margin pressure levels here as well. We'll go off of, we'll go, yeah, that's fine. Just about off of any low that we take these margin pressure levels off of, you get a lot of confluence here at around 1340 to 1350. There's also risk reward levels down here as well. 1350 even is a bit of a psychological level, not a big one, but a bit of one. That even 50 level or so. So if we do fall back below this level, I just feel comfortable buying. But at the same time, like right now, while I am generally bullish, I'm somebody who I can sit for 2 weeks and not trade. And then when I see a trade that I want to take or a rotation that I want to make, I'll jump in on it. Right now, if I was really looking to lean into a trade here, I'd just look for another bounce off of 1610 to 1624. Paul, what was your level? The weekly level, is that in line, or am I lower than you?
For Ethereum?
Yeah, for ETH, would you have any confluence around 1624 to 1610?
Yes.
Cool,
1628.
yeah. 1628. There you go. So mine's around 1624, where those shorts have to they're incentivized, or they're less incentivized to enter the market because they can no longer keep those liquidation points up there on, I believe, 5x leverage, which is a pretty popular leverage amount to use. So if we pop down to 1624 or you know, in this region, we'd, you know, essentially have a chance at finding some support. If we break it down in the 4 hour, which I'm not going to do, I mean, you're potentially putting on an inverse head and shoulders. This consolidation does look fairly bullish to me. I mean, you got to think about this in terms of supply and demand. Sometimes we have a pretty major demand zone. We came down to test this level, and it got bid up violently. I mean, yeah, it fell pretty hard. But what we saw was that bids started coming in and shorts had to cover, and we got squeezed from, you know, 14 and change, high 1400s, almost immediately, you know, within the course of 2 days, back up to high 1600s, and all the while slicing through a resistance level. This resistance level at 1610 to 1624, as we approach from below, it's going to be resistance. So it's hard for me to paint a super bearish picture. I think a lot of it's going to depend on what the legacy market does. I think this market could break either way. If we put in a plus 1% day on the S&P 500 tomorrow, I think we'll probably rally and we'll start to see ETH and Bitcoin break out. If we put in a minus 1% day on the market tomorrow, the S&P 500, I could easily see us, you know, pulling back to these you know, 1600 levels. I do want to take a brief peek at DXY, because DXY has, you know, been fairly important. It's the dollar currency index, and we've enjoyed this downtrend, this weakness in the dollar that has allowed markets to rally. And what's going on right now is we had this long-term uptrend, basically, you know, from mid-summer, June of 2021. We had DXY rising and rising and rising. We had our clearance pump. We've slammed back down, and we're back testing it as resistance right now. So this is a pattern, this trend line pattern, where you get the clearance pump and you slam through it off of your clearance pump and back test. That is a bearish pattern. So it's kind of a reverse bump and run pattern. And this, to me, looks like it's going to turn back around and start trending back downwards again. Now, if we recover this trend line and we get back up above it and continue to trend upwards in DXY, that's pretty bearish for the markets, in my opinion. I do think this is a pretty good opportunity, though, just to illustrate this pattern. I'll try to find another example where you get that. They're fairly common, both to the downside and to the upside. Here is probably one on Matic, I would imagine. So it looks like we didn't get the back test on this one, but we did get obviously the clearance pump. And, depending on how you draw this, you could say we did get the back test, right? Not super clean, but you get the trend upwards, right? The clearance pump. This is not the best example on Matic, to be quite honest. But it is, if you go and check and try to find a few, that is definitely an interesting pattern to try to learn. Yeah, it's gonna be tough to find an example off the top of my head.
Yeah.
Either way, I think it's. Oh, go ahead.
Pretty good.
What's up?
I was just agreeing. Yeah, the bump and runs. When you get those, they play out pretty well.
Yeah, for sure. And yeah, I've got a lot of confidence on ETH. We covered last week at around $2,000. If we throw on our long margin pressure levels, we get our 2160 kind of impulse move that was prior support, 2150 or so off of that local low. If we move these back a notch to our kind of 1K support levels, we got our initial resistance here. You could easily see us getting resistance again, testing that level. And what we'd potentially be putting in if we get resistance at 2K again, or at least in this 2K to 2150 zone of resistance, and we continue this, trend upwards, we could be putting in a super massive ascending triangle. And I'm not a huge pattern person in general, and even less so on like very, very large time frames. But this to me would be a very compelling pattern for setting up the next bull market. So we, essentially would get our bear market rally up to 2000. And then potentially put in a pretty bearish Q2, and it's unclear exactly how far this would come down to. I mean, I've drawn that fairly generously, but we could easily come back down and retest that prior all-time high, 1400, right? Our 2019, well, no, 2018, January of 2018 all-time high. If we held that region as support after going and taking a trip to $2,000 or so, and then third time's the charm on an ascending triangle, set up for a bull market as we go into late 2023 on ETH. But again, it's kind of the structure of all this is going to probably pivot around the Bitcoin halving in March of 2024. So I do think late 2023 could be pretty bullish for crypto as people start bidding up crypto in general, getting a little bit more comfortable with buying more towards the next halving. It's just, it's a difficult to exactly predict what the market's going to look like in, 6 months from now, especially when you could have surprises along the way in legacy.
Exactly. Yeah. Should be a fun year, though. Obviously, it's already off to a good spot. Nothing can get worse than last year, I guess. I mean, it can, but.
Well, yeah. There's no telling. Okay. Do you wanna any altcoins you're keeping an eye on?
Yeah, I was gonna
and I just
turn
see
and burn a few
Litecoin
real
there.
quick.
Litecoin just lost resistance.
I saw somebody ask about algo, so I could touch on that real quick.
Yeah, absolutely.
And then I was going to take a look at Filecoin from last week, and then Doge and Mana, I think, are some opportunity. I think Mana is the Filecoin of the week for this one, potentially.
Sweet.
We'll see. So, yeah, for whoever requested algo, we were looking for this, basically the reclaim back into this quarterly range. We had a few, pretty nice couple of targets here that we've made our way up to. Essentially, we're sitting pretty right now, basically right in the middle of the range here. So 29 cents, which is about a penny from where we're at now, looking to clear that. This quarterly pivot has obviously been met, so that is no longer untapped. We do have a monthly average area up here at 31 cents. And then basically the range high of this range here. So I would imagine if we clear this median, we would rotate the range in full. This is not an incredible move, 30%. And I say that is incredible to me, but everybody in crypto is, if it's not 600%, we're not getting out of the basement, right? So we clear that region though, and this would be an overtime target. So don't think that this could be something, or this has to be something that happens now, especially if it just really depends on how Bitcoin and everything kind of tends to be. Because like I said, if we're kind of gearing up for the last little hike of the, the current move to the upside before we get a decent pullback, obviously everything's going to pull back with it. But clear this region, clear 36, and you potentially have some monster targets above us. So 28 cents at the moment. These would be some areas over time I'd be looking to. 52 cents up to the overall macro golden pocket here at about 70, which does come in right below the yearly pivot as well. So I could dress this up a couple of different ways, but just on a high level like that would be what I'd be looking for, especially if we clear over 37 cents. So just like any other pattern out there, right? You'd want to see the breakout, the back test, and on and off we'd go. Otherwise, if anybody, especially in the trading group, we were looking for this one among many others, obviously, as we came into the year. When we got the back test right here, got the reclaim, off we went. So I think it's up even just from there, potentially 30%, depending on how you got in. Obviously, if you were catching the exact bottom, which I'm sure most did not, there was a 70% opportunity there. The other one I want to take a look at, Dogecoin, is an interesting one to me. I trade it often. Not so, this is one that unfortunately I bought like $200 worth of it back in 2017 and had like 200 million, and obviously sold them at a loss, probably for pennies, in 2018-19 bear market. So could have never done anything else in crypto and walked away with that purchase if you would have known, right? But how would you know?
I feel your pain. I feel like if you've been in crypto a while, you've been there, man. I bought
I look back on so
four.
much.
Yeah, man. I in 2018, I believe it was 2018. Might have been, actually it was, I believe, 2019. I'd have to look at the chart. It's been so long now. I bought 400,000 mana, 400,000 Decentraland mana for 3 cents. Sold them at 12 cents. Had a nice tidy. No, I sold them at not even at 12 cents. I sold it at 8.5 cents. I did 2.5x, almost a 3x on it. I got in a little bit over 3 cents, so it was probably about a 2.5x. And if I had held to the bull market for another 2 years, it would have been around $2.4 million, I believe. So that one's a little bit haunting.
Yeah,
It's a rough one.
it's you could go all day with some of them, but is what it is. We'll find the next one.
Yeah, I mean, at the end of the day, like, just accumulate in the bear market and
Yeah,
just hold those
yeah.
positions.
Cardano and Solana were definitely two of my last ones from that, that just were outstanding. I just can't even believe that they went as high as they went from where they were. And so Solana specifically, because that was, you got to think, like, if you put yourself in, like, let's just say we go into the exact same thing as far as a cycle would go. Solana went from $1 to 300 plus, and it was $1 in 2020 December. So January 2021. So let's just say we go all the way to 2025. 2025 is that next bull run, 4 year later, deal. Imagine that something that's like, probably still pennies now, gets up to $1, and then potentially from there runs another 300x. Like, that's what Solana did, and
Yeah, it's nuts.
wild to like have watched that the whole way. All right, so Doge, I was just throwing up some trend lines just to see how that kind of lined up. But yeah, so I've been looking at this range for a long time. We actually traded this really nicely over here. Which was like back from last year. Came up. I'll just kind of zoom in. I mean, it's not really where it's hindsight at this point, but anyways, we were looking to reclaim this range here. We ran it really nicely up to this point of control. It had a nice harmonic pattern come into play as well, which was a bearish setup there, basically taking us back to at least this area here. Fast forward now to what we've been doing. We've been obviously making another range here, and Doge is one that is a market exciter, right? That's what I always like to call it. It's and it hasn't really moved during this rally, right? So unlike a lot of other projects, you got a nice 48% pump so far, 30% right now where we're sitting, and that's from the low from the beginning of the year. So it's very interesting to me that we haven't shot up out of here. This is the one that really gets everyone and their mother talking about crypto, right? It's Doge, it's XRP, it's Shiba, those few, and a couple other just major, really we call them like cult coins essentially, but the masses really get a hold of this one. So it's interesting to note that we've had this huge rally and we have not seen a rally out of Doge. So I'm kind of wondering if this is going to be one of those last movers. But we'll see. And yeah, really just holding this, really tight area right now. We do have an untapped pivot for the year, comes up right at the overall range high. However, if we were to come up into this region, I would imagine we actually take a nice larger stance up here. So that old range that I was talking about from back here, we technically are still living within it. And very low volume in this region. Obviously, we've been building it out over to the right there now that we've put in some more work, but we do have that 14-cent region here. This is actually last year's yearly open, so 2022, not 2023. You can see how the relevance of this area came in. This was in April on the back test there. So that would be a nice key area to be paying attention for as well, 17 cents. But potentially, I think we could almost shoot up to the range high here if things really get out of hand. But these 5-6 areas would be what I'd be concerned with as far as upside. Once again, not a real big. It's a little risky, I guess I would say, as the markets are just like pushing up. However, this is not something that's pushed up 300%. It really depends on how you want to play this. For me, this would be a short-term trade. Buying in the middle of the range is always tough. You're buying right at the point of control. So, I mean, like these things are not necessarily where you'd want to be getting involved at. But, you still can, I guess. So from here to, overall the high, potentially 31%. Got a gold pocket here that we've been sitting on for a while with a weekly area here at 50%. That point of control at 14 is a big one. Obviously, you can see over here we have not cleared through it on a daily. And if you do clear through that region, previous yearly open and the range high at 18 cents would play into effect. But not a grand setup in my opinion. Aside from if you were looking at that, we kind of threw on some of those trend lines. So if you're looking for a breakout in that sense, you could be doing that. You could dress this up a couple ways, I suppose, but that's what I'd be looking at as far as levels would go. So for me, really clearing that 9.4 cents, which is this quarterly pivot. You can see how it's held us down really well. That would probably be the main, the starting, kind of like that line in the sand that kind of starts leaning that we're going to continue upward. Claiming the point of control, you could, kind of start there. But once again, you are kind of in the middle here. I did just want to point out that I do think that we could get a pretty explosive move out of Doge, potentially a little last runner of the rally here before a decent pullback in the market. Not saying that we're just going to go back down to new all-time lows across the board, but at some point we're going to have to get a decent pullback, right? So that one's on my radar. And then Mana, I think, has the opportunity. We talked about, let's look at Filecoin real quick. And say we talked about
this was a nice call last week. Yeah, I think we were in that pullback 479, right?
Yeah, it was right here. So Monday the 13th was right. So this was a really clean, exactly what I was looking at for one of the projects we were just looking at a second ago. I can't remember which one it was, but we deviated the range. You came back in. You got the reclaim. So could we have just dumped out of it? Sure. But you had a really clear area for invalidation, basically a stop loss below the low, and you were basically re-entering that old range. So when that happens, obviously we had a pretty immediate target right here at the point of control. But the biggest thing to me about this chart, and we discussed how GRT had a pretty big run just beforehand, and maybe it had some news. We were saying how, whatever the news is going to be, this could potentially be one of those 200 to 300% runners too. So ran up pretty much to, burn through these areas pretty quickly. Ran up to this local high. It's about 100% move so far. Obviously, we're getting a potential pullback. This is also tapped now, so let's go ahead and change that. And for me, I'm still targeting upward, towards, potentially this $14 area, $12 to $14, I guess I would say. So currently, I'd be looking to flip this region. So 949 is the current line in the sand. And then from there, we'll see how things kind of progress. Chain link, just to keep on brand with our last update here. We were looking for this multi-month breakout. It's been in a range for 10 months here. Obviously, we've seen some deviations here. The really interesting thing about this is that this is probably the tightest range I've seen out of any altcoin in the space. for the same period of basically as the market just completely shit the bed last year. Obviously Chainlink did as well, but during the times where, FTX and all that, this is during all those time frames. This is from last year, May, all the way till now. We pretty much just bounced around, holding all the lows, holding all the highs. So it was very interesting. Maybe many would be looking to see if we clear through this area for potential more upside. For me, it's you want to see exactly what we're doing right now. This is the value area of this region, so potentially we have a decent area to long. Once again, you're getting wicked out up here at the high. You could very well just come right back into this region and dump out to the bottom. But you got a nice area to consider for stop loss, whether it's spot trade or leverage trade, right? And from here, challenging up to take out these highs for one statistical target right above that, and which I think we aligned pretty well together on that $10 region. And then after that, I'm looking for this overall gold pocket in the yearly pivot, which is coming in at like $13. Thing about this is if we actually clear this region right here, I mean, you're talking about almost a year, multi-month for sure, going on 10, 11 months. If you get that overall resolution to the upside, a big move is coming regardless. And for Chainlink, 100% move, which I think from the overall low, it's 150, but just from where we are now, just from the breakout, you're talking potentially 70%. We've got an old range just above that, it takes us up to 100. Nothing, not something you can, once again, you got to realize where we are in the current market at the moment, and we have been rallying really hard across the board. So definitely just consider, your options there. But this is something that I'll be taking an interest in, see how things play out with that. And then Mana, I think potentially has a really big upside opportunity as well. We've been flirting around with this range here for quite some time, basically the same time frame since April of last year. So this is a year, got a really big deviation from it. So similar to Filecoin, if we make our way back into this region and start holding it, we've already came into it, tagged one of our statistical targets, got a little, decent little box here, got a pretty decent area right above it, and then you got the overall gold pocket. And one thing, when you kind of I try to find confluence across on a couple of different ranges when I do this. So looking at this from basically just merging it all at this point, you can see that we're coming right into the point of control now from April of last year as well. And we've already essentially came in and got that back test of the overall price action, right? So for the volume of everything from a year ago, almost, that's 10 months. So similar to Chainlink, we've already gotten that back test. You're coming in, it's almost the exact same setup as Filecoin in a sense. And, you very well could, make our way up to some of these areas up here. So this is one that I just kind of wanted to tune into tonight. I thought it was, looked pretty interesting. For me, it really is clearing. We're basically right above where we were at. So that's essentially claiming that point of control. If you're looking at this as the overall range, looking at this from that old range as well. Ooh, there we go. That'll be basically breaking back into this region, looking to hold it. So either way, that level is still what you want to see us get back above. And then we've got a pretty decent little, and once again, this is not a huge 200-300% move. Potentially this 80% move is, where I'd really be looking to, possibly pump the brakes. But even if you just run the range 65 without leverage, that's a pretty good, pretty good move. But yeah, I think that's about all I wanted to kind of burn through. Hope we didn't take up too much time there. Oh man, look at us, right at 11.
Yeah, no, we're good. We're good. I'm gonna take a peek at Decentraland as well, Mana. And I also I just published a deep dive report on like blockchain gaming. I think getting a strong blockchain gaming narrative is inevitable at some point. So I do think I could absolutely see Decentraland, Mana, probably Sandbox, probably Illuvium. When Other Side for Bored Ape Yacht Club drops, that could be the spark. So yeah, I want to do a little peek at this as well. Interesting. 75 cents, kind of our key resistance level, psychological level. Obviously $1 is interesting. Decentraland or mana rather, is going to seem a little bit more expensive once we pop up to $1.01 and we add that digit in front psychologically. But we do have, I'm personally probably not targeting 250, but very, very interesting level, as is this. So I just, starting out from basically zero, around $1.60, you kind of have that structural level. Starting out from zero, I just kind of like to get my bearings here. Let me throw on the long margin pressure levels from our most recent low. Yeah, we've actually just completely blown through that and made support above it. If our last local low here, and kind of what has been in line with our range low, ends up being our support region, and this is all a big deviation. We're looking at, $1.22, $1.23 is where those longs are going to start fading a little bit, potentially towards the top of somewhere in this region. Right there. I know those are kind of just wide regions. Otherwise, our risk reward levels I do want to throw on, because sometimes when you have these larger trends, the low end of the risk reward level can be a really good upside target. So kind of a further stretch target is really actually in line here around $1.68. So was that, what was the target you had again?
Depends on which one did you just say?
What was I had $1.68, $1.69 as a potential high end target.
Gotcha. Yeah. I'm looking at 142 and then to 187. So
142 and what?
To 187. I see what you're talking about though with that high
Gotcha.
from like April last year.
Yeah, our high there support, and then it was just the kind of the supply zone on our impulse move down. So that's an interesting level for me as well, 169. Yeah, this I do like this a lot. The sheer recovery of this the support level here, turning it into, prior support, turning it into support again, reclaiming it, potentially moving back up makes a lot of sense. If Decentraland does well, if Sandbox does well, kind of the lower cap one that everybody's really, really hyped up about is Illuvium, which had just a horrible. Actually, let me see. This is all the data on it. Was just ridiculously overvalued because it had a low circulating supply. It pumped like crazy all the way up to $1,900. And then those emissions came in the bear market here. And now we finally started to break this downtrend and start trending upwards again, where a lot of that inflation is out of the way. Not all of it. Actually, I want to go to CoinGecko here and just double check what is the Illuvium fully diluted valuation. Under $1 billion. Circulating supply is 2.25 billion. So it's certainly not very diluted, not everything circulating, but a lot more than there was initially when it launched in the bull market. I mean, this thing just launched September 2021. Absolutely was overvalued. So we could have more emissions on our way, but we are making support on top of that $75 region, which is, we got a little bit of a double bottom here. So that would be probably the level to go long at if you were looking for a long. Let me move this up a notch. Yeah, getting resistance at around $100, which is also going to be our price bias level at pretty much exactly $100. There we go. So we're actually consolidating between 75 and 100. Very interesting. Closer to 75 would be interesting for a long. Potentially shorting at 100 if you're more bearish on this, but this thing, what we've seen is we've seen a lot of coins in this bear market rally with low circulating supplies pump pretty hard. You look at Filecoin. So this is low. It's 22% circulating supply. That low float makes it very pumpable after very large drawdowns. So you look at Filecoin, you're talking about a similar level, like 19%, 20% fully diluted, or 20% circulating versus the maximum supply. Filecoin pumping super, super hard. So while in the long term, I usually look, you don't want to be in those low circulate. You don't want to be fighting emissions in a downtrend for a long-term investment. when demand comes in and you're bullish again and you have this bullish trend, it can be very aggressive. That low float can create squeezes the to the upside essentially. So Illuvium potentially interesting there, but I'd like to see it get up above $100. Interesting stuff. I think we're around our hour. Blur's interesting, but on a shorter term time frame. Again, another low float example, kind of putting in some consolidation there. But yeah, I mean, what are your general thoughts directionally on the market this week? We can kind of close out with that. Are you thinking? Are you thinking upside and we make another leg up, or are you thinking a little bit of a pullback and a correction? Again, I'm split. I think it's really going to depend on what happens with the S&P 500 and the XY this week, as boring as that seems.
Yeah.
And I think it's all about just reacting appropriately. But interested to get your thoughts on in terms of up or down.
Yeah, I think that this week is a pretty pivotal time. Magic, my business partner, the other main analyst in our trading group, he specifies not only, but he kills it on fib time analysis. So this week we've been anticipating pretty big pivotal moment for quite a bit. So it's interesting to note that we're coming into some of these areas during that time frame. So to me, similar to you, if you're looking to enter anything right this moment, I mean, it's, you got to be pretty neutral, because it is at that point where, we could pump another 20, like just showcasing the one coin from the earlier where, 600% to the upside could shoot up another 30, but, and that's not obviously the norm, but are you really looking to, even for Bitcoin, we're at 24,000, 25, we're looking for 26, 27, in the next little push up. Is that 7% worth it? If we go to get that pullback now, you're looking at potentially 15-20% across the large caps, possibly 40-50%, if we go down in these alts. So you really just gotta be aware. But if I had to squirt gun to my head, I guess I would say I'd probably anticipate a little squeak higher, before we get a decent pullback, and if for this week.
Yeah, I'd probably tend to agree. It's definitely an awkward time for the moment, or awkward time for the market at the moment. It's like the upside feels very limited, but so does the downside to some degree. Like I it's like if Ethereum pulls back to 1350, I think people are just going to be all over bidding that right back up. But at the same time, it's like it's not super attractive to bid Ethereum right now at 1700 and try to squeeze out. Ethereum may be a little more attractive because that next level up is probably 2000. But like you said, Bitcoin is like, how attractive is it to bid Bitcoin at 25K when your upside is like 28K at the high side, 26 to 27. You had some of the, I think you had the 26.7K resistance level. And then, same thing for a lot of these altcoins that are pretty extended. It's like, how attractive really is it? So I do think we get another leg up, but if we do get that last little squeak up, like you said, it's like, all right, then we're probably going to come back for a little correction. I don't know. It's an interesting market for sure. And it'll be interesting to watch the S&P 500 open tomorrow morning and see if that dictates the direction. Definitely want to be paying attention to that.
Yeah, for sure. And it's all about Doge and XRP. When you see the kiss of death, when you see those two pumping,
Yeah.
that's,
It's
that's
time.
that's the end of the road for a bit. No, I'm kidding. But yeah, it's I think it'll be good. And somebody just mentioned there's something this week, FOMC or some report, economic report on Wednesday. So
Economic report.
we'll see.
Um,
It's a short week as well, a little holiday today for the legacy
yeah.
market. And you have to, I can only imagine how many are attempting to just, the more that we stay at these levels at the high, obviously this is where you'd want to look for shorts, in a sense, as you're coming into resistance. But, it's a lot of times we just push up just enough, just to get everybody out before the move down. So we spend a lot of time in this region, so it's going to be interesting to see. But yeah, for me, I still think it's a potential for a little bit up. Obviously, we have what to look for to start changing that tune. But I think that's what we potentially have for this week, and then obviously we can reevaluate. But yeah, I'd say a little higher.
Yeah, awesome, awesome. Well, cool, man. It's always a pleasure to have you on. Can you want to plug your socials real quick? Tell people where to find you.
Yeah, absolutely. So I have a YouTube channel. It's under Leading Crypto. Also a website, leadingcrypto.io. It's got all information if you're interested in joining the Discord, trading group, things of that nature, following a couple other avenues there. And then you can follow on Twitter at CVO underscore crypto also.
Cool, guys. And then, as usual, you can follow me on Twitter at 0xstacker. Check out the links in the description below for Sistine.ai. If you'd like to join Sistine Research as a subscriber, we put out research. Basically, the mission statement there is simply we identify optimal risk reward scenarios in the market and present them to our clients. We've got a great Discord, and if you want to trade on leverage, my preferred exchange is Bybit. There's an affiliate link in the description. They're always running bonuses. I don't ever keep up with them. I feel like they change it every single month, but feel free to check that out if you're interested. And thanks so much for tuning in. Consider liking, commenting, subscribing, and definitely go check out CVO Crypto and Magic Internet Money on their channel, Leading Crypto. And otherwise, have a phenomenal night, guys. It's all about, guys. I say this time and time again. You put in the time on the charts. You can't expect to be a successful trader and not put the time in on the charts. So that's kind of the point of these kind of late night streams, is just putting the hours in on the charts, getting a bearing on what the market is doing, and being able to prepare for multiple scenarios. Guys, thanks so much for tuning in. We'll catch you next time. Peace.